Silver had a top of $50 in 1980, just after it broke through this triple top, about a year after it broke the triple top at 6.5. Then $50 times the multiple of 4.62 would be a top of $231, assuming the Fed doesn't print any more money at all. Of course, it will. So if we're looking for $50 silver, we're looking for a $231 top, and it is looking very much like we are in the late 1970s. Close to 1979 now in silver, and silver is just starting now to get moving. Once we hit 30 and rise above it, we will be in space. Who knows how high we can get, and the panic should be very soon after that in real money terms.
The 2024 silver market is set against a backdrop of macroeconomic shifts, robust industrial demand, and geopolitical tensions, with forecasts hinting at near-record demand levels. This blend of factors reflects a year of opportunity and volatility in silver prices. As anticipation builds around the timing of interest rate cuts by the Federal Reserve, the first half of 2024 may see cautious investor behavior towards silver. However, a potential shift to lower rates in the latter part of the year could enhance silver's appeal as an investment, counteracting the opportunity cost of holding non-yielding assets. Rafi Farber, the publisher of The Endgame Investor, is a seasoned analyst known for his insightful perspectives on financial markets and commodities. Expressing confidence in his latest analysis, Rafi Farber believes that the current top in silver could lead to significant price appreciation. Farber stresses the relevance of the CPI in gauging market dynamics. In his view, if silver reaches above $50, its peak could reach $231, assuming no further money printing by the Federal Reserve. A CPI report indicating significant inflation deceleration could hint at the Fed's willingness to lower interest rates sooner than expected. Such a development might weaken the US dollar, subsequently boosting the appeal of silver as an investment and driving up its price. From a technician's perspective, Farber highlights an intriguing pattern in silver's historical price movements and compares it to the current market situation. Despite the conventional expectation of a collapse in asset prices following a triple top, he predicts that silver will break through this pattern. The World Bank's Metals and Minerals Price Index rose 9% in April 2024, following a relatively stable first quarter. Recent price increases reflected positive sentiment about more robust demand amid concerns about supply disruptions for some key metals. Drawing parallels to historical trends, he suggests a breakout similar to that seen in silver in January 1979 could occur swiftly, potentially resulting in significant gains soon. Now we present the clips of Rafi Farber's insights from his recent video with Arcadia Economics. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
This is the silver report, of course, and I saw something pretty exciting going on in the technical action here. I've shown this chart before. I wanted to get through it through another angle here. This is not a contiguous chart. You see here on the left side, you have January 1974. On the right side, you have January 1978. So there is a gap here that I'm not showing, but I wanted to zoom in and show the triple top here that happened in the 1970s and compare it to what's happening now. So we see here in 1974, silver had a parabolic top of $6.50. We repeated very closely that top here in May of 1974. So this is the equivalent of August 2020 and then February 2021 silver squeeze top, where we got very close to the second top here. And finally in 1978, January 1978, 4 years later, 4.5 years later actually, because this is February and this is November, almost 5 years later, we had the final triple top at $6.50, almost exactly. It's a very near perfect chart here, and now I want to show you what's going on today. So we have 2020 to 2024. This is a very, not exactly equivalent, but there is no exact equivalence in technical analysis here. I just wanted to show you this and then compare it to the CPI when I came up with something pretty fascinating. So we have here the triple top. Here is the 1974 equivalent. Here is the later 1974 equivalent. And here is the November 1978 equivalent at $30. Same triple top. Now, usually in triple tops, if the triple top holds, you have a collapse in asset price. I do not think that's going to happen now. I think we're going to break through that triple top just like we did in only 1979. Now, note here, the top at $30. And note back there, the top at 6.5 at $6.50. Now, what does that remind you of? Here I did the math. So we have $6.50 top in the 1970s versus a $30 top now in silver. Sound familiar? Indeed it does, because if we take $30 divided by $6.50, $6.50. I don't know why I keep saying that. The ratio is 4.62. And now I know that the CPI is bull. I get it, but it doesn't mean that it's completely invalid. There is some information being relayed in the CPI. Interestingly here, we have the CPI of November 1978, when that triple top was hit, was 67.4. And the CPI now, if you look over here, in this red box, 312.332. Now you take 312.33 divided by 67.4, you have the ratio of the increase in the CPI factor. That's 4.63. Same number, almost exact same number as the difference in the ratio of the silver top, $30 now, $6.50 then, 4.62. Now, if silver had a top of $50 in 1980, just after it broke through this triple top, about a year after it broke the triple top at 6.5, then $50 times the multiple of 4.62 would be a top of $231, assuming the Fed doesn't print any more money at all. Of course it will. So if we're looking for $50 silver, we're looking for a $231 top, and it is looking very much like we are in the late 1970s, close to 1979 now in silver, and silver is just starting now to get moving. Once we hit 30 and rise above it, we will be in space. Who knows how high we can get, and the panic should be very soon after that in real money terms.
During the interview, Rafi Farber underscores a HUI gold bugs index pattern indicating a potential breakout above a significant resistance level established since 2011. He expresses confidence that once breached, this could trigger a bullish momentum for mining stocks, potentially ending a prolonged bear market. The gold stocks rose this past week despite the fall in the metals. The Gold Bugs Index, HUI, gained 2.4%, while the TSX Gold Index, TGD, was up 2.0%. The gold stocks leading is a positive development that keeps our thoughts of higher gold-silver prices intact. Regaining $2,400 would set our sights on $2,500. Above $2,420, new highs are clearly possible. Regarding his perspective, Farber anticipates a potential shift in market dynamics, with mining stocks leading the metals market instead of reluctantly following. He further anticipates this shift could coincide with broader financial instability, possibly triggered by developments in Asia and the yen. Let's get back to the interview.
This is the triangle trend line from 2011, the all-time high in mining stocks. This is the Huey Gold Bugs Index. I'm going to show two indices here. We have the top here in September 2011 at about 570. We have here a trend line established in 2020, hit again in 2022, and we're just below it here. We're at this resistance over here at about, what is it, 270 or whatever it is. And miners did very well yesterday. So once we break through this resistance, we have to break through this triangle trend line, and then we should be off to the races, going back to 2012, where this precipitous collapse began a humongous bear market, which we are still struggling to get out of if you're counting it by old highs. Zoom in here, how close we are to this triangle. This is the same triangle zooming in from 2020 on a 5-year chart. So we have here a touch, and here we're just pinned below this resistance. We're going to break through it maybe in the next few days, maybe in the next few weeks, but pretty soon. And once we hit something around 290, we should be out of this triangle formation and off to the races. GDX is even closer, and I think GDX is a little bit more valid than the Huey because you can't really buy the Huey. It's just an index. The GDX is actually an ETF that people buy and sell. So I would say it's slightly more accurate when it's reflective of buyer conditions or seller conditions, market conditions, basically. So we have the top here in 2011 in the GDX and a touch here, and we're very, very close. The triangle trend line looks to be at around 36 or so, and we could break through that any day. We'll see what happens. If we zoom in, yeah, it's about 36, just above 36 here, and the further we go out, the lower it will be. So I'd say once we break through 36, we are through this triangle and off to the races on miners, and we go into a situation where miners are leading the metals instead of following them reluctantly higher, which has been the case since I think, the 2011 top, basically, more or less. There were instances where miners would lead, but they weren't sustained. I think now it will be sustained as we enter into a monetary financial crisis that could be triggered by Asia and the yen. Who knows what's going to happen in the banking system in the next few weeks and months? Stay put. I do believe we are very close to January 1979 when the previous triple top was broken out in silver, and then we headed within a year to $50. This could happen very quickly, and we've been waiting for the beginning of it for many, many years. It is, I believe, imminent in the next few months.
After 3 years of extreme volatility, commodities prices are set to broadly stabilize in 2024. Silver price predictions for the next 5 years are primarily bullish, seeing it as undergoing transformative growth over this period, driven by specific, impactful developments. How do you perceive the potential impact of macroeconomic shifts on the future trajectory of the metals market? And what strategies are you considering to navigate these uncertainties? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.